Hello, hello, hello. Welcome back to another tutorial on the MW Futures liquidity scalping strategy. Last time we went over the start period and the funded account rules, and today we will go over the risk management section of the fair value gap and the risk management of the general settings. So for this purpose, I already resetted my settings to default because we played a little bit around with the funded account settings, etc. on the last video. But let's dive into it right now. So let's start with the first subject here, and that's the initial stop loss at. Let's read the tooltip. As you can see, the tooltip says, be aware, min and max stop loss overrides this. And we will get to this tooltip explanation a little bit further down the line. But let's see what this drop down menu gives us. So we have three different initial stop losses. We have the fair value gap low and high, we have the fair value gap candle low and high, and we have the candle low and high. So on default, this is set on fair value gap candle low and high. For now, give me a second and let's place this at 0 for a minute. So let's take as example this trade over here. As you see, we had our entry on the top of the fair value gap and the stop loss on the low of the fair value gap. If we would change this to fair value gap low high, you will see that the initial stop loss will be placed on the low or high of the fair value gap. Meaning that if this was a bearish fair value gap, let's say, just in case that this was a valid fair value gap, and we would enter a limit order here and a stop loss, then your stop would have been on this candle's low. So the top of the fair value gap in your limit order would have been on the high of this candle. So that's the first setting. Very straightforward, pretty simple. Your stop loss will always be placed on the high or low of the fair value gap. This is also taught in ICT's different mentorships. He talks about this, that once you get more advanced as a trader, that this could be good enough for you. The default setting, however, is fair value gap candle low and high. So if we look at fair value gaps, it's always consistent of three candles, right? So the left candle, the middle candle, and the right candle. The middle candle is always the fair value gap candle. This is the candle which explains / shows the fair value gap. If you would place it on this setting, your stop loss will always be placed on the low or the high of this particular candle. Very straightforward again. So fair value gap candle low high. As for the third option, candle low high, means that the stop loss will always be placed on the highest high or lowest low of the first initial candle. If, however, the fair value gap candle is larger than the first candle, it will use the high or low of the fair value gap candle. So basically, what the setting does, it will always place the stop loss on the highest high or the lowest low of the three candles. Very straightforward. So now let's go over the second topic, and that is the minimum fair value gap size. By default, this is set to 5. Let's read what the tooltip explains us. The minimum amount of handles required for a valid tradable fair value gap. So on default, this is set to 5, and what does that actually mean? If we look at how large this fair value gap is, it is 15.75 handles. So, for example, if I would change the minimum fair value gap size to 16, this color, oh, let's go a little bigger. Apparently, it's a little bit bigger. Okay, let's place it to 17. You will see that it gets changed to the color blue instead of green. If we place it back to 5, you will see that it changes back to green. So This is a filter criteria that you yourself, for your own strategy, can fill in. On NQ, I have set it to default of 5 because 5 is a nice, decent fair value gap, which gives you plenty of room to have a little bit of drawdown and take your trade. Do know that the default setting is 5, but for example, when you are trading Forex or gold, this can very well be 0.005 or 0.1, for example, due to the fact that the sizing of the whole chart, the prices that reflect the particular ticker are different. So that's also what's set in. When you get access to the script, you know that I have 3 different rules, and one of them is that you are aware of the fact that the script is pre-created by default for NQ and MNQ with the default settings. This is one of those things that's very important for that. All right. The next 3 topics are just based on colors. So you see right here that this fair value gap has a color of green. Let's have a look at what fair value gap long color means. So when this fair value gap is green, that means that there's more liquidity to the upside than there is to the downside. As for the fair value gap short color, this means that there's more liquidity to the downside than to the upside, instead of upside to downside. And fair value gap neutral color means that there is just as the same amount of liquidity to the upside and the downside. But a fair value gap will also get this color once it doesn't fit the fair value gap criteria. So let's, for example, as you can see, these are all liquidity lines that have been purged already. But during the moment of this creation, there was more liquidity to the upside than there was to the downside. Hopefully I can see a valid example for sell side. Yeah, so during the creation of this fair value gap, what liquidity was left behind? We had this sell side liquidity, that sell side liquidity, and that sell side liquidity, and we had one buy side liquidity pool. So there is more sell side than buy side, meaning that this will be a determined short fair value gap according to this strategy, right? So let's go back to the actual trade example. So in this case, with this trade, what was happening actually was that we had, during the creation of this fair value gap, we had one sell side liquidity pool, and we had 1, 2, 3, 4, 5, 6 buy side liquidity pools, meaning that this fair value gap will be determined as a fair value gap from which we take longs. So this is basically just a color reminder. Okay, with this color I should only look for longs, I should only look for shorts, or I shouldn't look at all at this fair value gap for any trade at all. So hopefully this section of risk management for fair value gap creation and initial stop loss placement and when is a fair value gap a valid fair value gap to trade from, due it to the size, is explained properly for you. So now let's go to the general risk management. Let me reset this again. So on default, these are the settings. So minimum stop loss of 0, max stop loss of 15 handles, max trades is 1, break-even amount is 5. So let's go over these things one by one. Let's go over the first tooltip of minimum stop loss. The minimum stop loss required on each trade set to 0 if not applicable, meaning that right now it is not active, it is at 0. But let's have a look on what happens when we put max stop loss to 0 for 1 minute. So, and we have our initial stop loss at the fair value gap candle, fair value gap low and high. We know that the stop loss will be placed here. If, for example, we want to have a bigger stop loss than 15, 16 handles, what you could do is that I always want to have a minimum stop loss of, let's say, 30. And then it will place it over here. Very straightforward. You would just have a minimum stop loss of 30. But let's have a look at the next one, max stop loss. So the max stop loss on each trade set to 0 if not applicable. As you can see, it's now 0 and on default it's 15. If you would place it to 15 right now, you will see that it will change. And it will change it to 15 handles. As you can see, the minimum stop loss amount will not be overridden by the max stop loss amount. So with this, you can have some very simple risk management. If you wonder why do I place this on default on 15, well, it's very easy. In several ICT mentorships and videos, he explains, for my son, I tell him you have a max stop loss of 15 handles. Very easy. Also for this counts that the script is solemnly created in the default settings for MQ and MNQ. Meaning that if you switch to gold, for example, that 15 handles on gold is a lot. Perhaps you want to have a stop loss of 0.5 because you go at tenths, 0.1, 0.2 with gold. And the same counts for Forex. You probably want to have a stop loss of 0.0001, something like that. Alright, let's continue to the next topic because I think that the minimum stop loss and the max stop loss is explained properly right now. Now we have max trades. Let's have a look at the tooltip because this one might be a little bit confusing. So for each new 30 minutes, an hour, start since allowed trading hours. What does this mean? So as you have already seen is that these liquidity pools get created after a certain amount of time. Once a new liquidity pool is created, that means that there is a new session. And with this script, we are allowed to trade each session. And how many trades are we allowed to place in that session? Well, we are allowed to place 1. If we would change this to 2 or 3, that means that in this time period, so from the creation of this fair value gap to this time, in this time selection, we are allowed to place 3 trades. Obviously, we only placed 1 trade here due to the fact that we are already in a trade, but for example, we would have been stopped out here, then we would have been able to place a new trade. So that's how that works. So for every liquidity session, means every hour basically, we are allowed to place 1 trade. So let's go back to here. So that's our default settings. So you can read this as every hour I'm allowed to place 1 trade max, or 2 trades max every hour, 3 trades max every hour, etc, etc, etc. So that's that. Alright. Let's place it to 1. Now let's have a look at the break-even amount, the tooltip. So the amount of handles in profit to where break-even stop is placed. Okay, that might sound a little bit obscure, but it's actually quite simple. So once we have reached our first profit target, that's most of the times a good place to go to break even. So once first profit target is reached, you see that the stop loss amount is taken up to break even because we entered here. There's your stop loss. If we, for example, would place this at 0, so there we go, 0, you will see that our break even is literally our break even. So once we have hit our first target, we will put our stop loss to our entry. If we put it on 1, it means that we will go 1 handle above our entry. We'll go 2 handles, but if you, for example, will go 10 handles, then we go 10 handles. Let's see what happens if I put it to 30. Let's hope that that's enough. Yes. So 25 is perhaps a better example. 27, come on. I want to give a good example here. Yeah, okay. So let's say your break-even amount is 27 handles, so that you are minimally are getting 27 handles once your price gets back to break-even. So we hit our first target, we go to break-even, and then as you can see, our break-even target is hit and all the rest of the contracts are taken out. Very straightforward. Again, the default setting here is 5 handles. I myself have found that 5 handles is a very nice amount because you cover your commission costs most of the time and it gives you plenty of breathing room for your trade to still continue going to its actual profit target. So with that, we have gone over the risk management on how to determine your first stop loss, how to determine valid entries dependent on how big a fair value gap is, that you can customize the colors for your own liking of how to determine a long trade, a short trade, or don't do anything at all. You know how to place a minimum stop loss, a max stop loss, how many times you can trade each hour, and the minimum amount of handles to which you should go to break even after first profit target is hit. Remember that this is set on 5 handles. You don't want this, for example, in Forex or something like that. On Forex, you will probably set this to 0.001 or whatever. So thank you for watching. And next time we will go over the time settings of liquidity and also the time settings of trading and the time settings of trade avoidance. I'll see you there and have a great day.